and welcome. You tune into Market Fatafat with me, Ankita Saxena. In the next 1 hour, we'll take you through all the top buzzers in trade today that are buzzing either in the back of news flow or on the back of technicals. But first up, let's take stock of how the market is really shaping up at this juncture. Well, it was supposed to be a good day after, the cool-off that came in the last 3 sessions. But the fact of the matter is that even though we're managing to hold above the 25,500 levels on the Nifty, we have cooled off from the highest point of the day. In fact, we are down almost 62 odd points on the Nifty from the highs. Nifty Bank also has turned red is flip-flopping between the red and the green. In fact, it is trending towards the lowest point of the day right now. It has turned absolutely flat right now. It has given up those morning gains. In fact, from the day's highs, it is down 185 points, but nonetheless holding out in the green. As far as the sectoral indices are concerned, we do see the autos take the lead right from, morning. Autos have been in the fast lane, trading with gains of a percent or so. Hero Motor, Motherson, Maruti, M&M, all of these are trading with gains of 1.5+%. Nifty Media and FMCG are also doing well today. On the losing side, we have the PSU banking names that are not doing well, have been reeling under pressure, and so is Nifty Realty that has been reeling under selling pressure. Broader markets also in tandem with the benchmark indices are seeing gains of 0.2%. Mid cap and small caps gaining 0.3%, are outperforming the benchmark indices. After that 3 session of underperformance, they're finally outperforming the benchmark indices. So largely that's how the market is shaping up. Advance decline ratio still tilted in the favor of advances right now. But let's get on board. Ashish Kyal, who's the founder and CEO of Wave Strategy Advisors, on the technicals, and from our research team, we are now joined by Ravinder. Hi, good afternoon to both of you. Thank you so much for joining us to tell us about all the buzzes in trade. Let's get started with the show. Well, the first counter that is in focus today is Indian Bank. Now, Indian Bank is a couple of news flow and updates coming in, quarterly updates before we get started with the earnings season. And for Indian Bank, we have the quarterly updates. The total business is up 10.2% on a year-on-year basis at 13.44 lakh crore rupees versus 12.2 lakh crore rupees. The total deposits are also up 9.3% on a year-on-year basis, and the gross deposits are up 11.3% on a year-on-year basis at 6 lakh crores versus 5.39 lakh crores on a year-on-year basis. Now, despite this uptick coming in, Indian Bank was doing well in the morning, but has given up those morning gains, is currently trading towards the lowest point of the day, reeling under selling pressure. In fact, the entire PSU basket, like I mentioned, PSU banking names are reeling under selling pressure today. Indian Bank also following suit with cuts of 0.7%. But let's move on to the next counter that is in focus. Ashish, you picked up Voltas for us on the charts. Tell us, what do you see for this particular counter? This one is up 3% in trade today. In last 1 month, in fact, it has started picking up steam after that correction. But tell us, on the charts, what do you see? Voltas today is, of course, buzzing on the back of the 256 crore show cause notice that they have got. But you tell us, on the charts, what do you see?
Hi, afternoon to you and all the viewers. If you look at Voltas, the overall trend for the stock looks to have reversed back on the upside. And what we are seeing in the market is a rotational sector, rotational buying that is emerging. So it was the financials first, then we saw some kind of a buying emerging in the specific auto stocks, and now I think it's consumer durables that can do well. So Voltas, I think, is well placed from the sector rotation perspective. Also, it formed a double bottom pattern around 1200 as the support, very strong support, giving a breakout of the neckline, and we can expect it to move towards the level of around 1550 on the upside. The immediate support or stop loss that one can maintain is on the downside near 1330 levels.
All right. Consumption basket could start moving in just like the auto pack, in time for these names also to start moving. But coming to you, Ravinder, you picked out one from the pharma pack, Alembic Pharma. Tell us, what's the news flow here?
Well, yes, Alembic Pharma is in focus, where companies say that the Alembic Pharma, a wholly owned subsidiary of the Alembic Pharma, has acquired Utility Therapeutic Limited to expand its UTI drug portfolio in the United States, and the acquisition includes 100% ownership of Utility Therapeutic acquisition, and the cost is approximately $12 million, and the deal is expected to be completed within 30 days. Company says that the company aims to commercialize Utility FDA approval and pipeline product in the US market. So back of this, Alembic Pharma is in focus, and the stock is holding a gain of more than 1%.
All right, moving on from Alembic Pharma to the next counter, keeping with the healthcare space, Apollo Hospitals. That's what you picked out for us on the charts. Now, Apollo Hospital has quite a few news flow coming in. In fact, in the last 5 days, it has moved up 5% on the back of that separately listing of its digital and pharmacy business. A lot of value unlocking happening as far as fundamentals are concerned for Apollo Hospital. But on the charts, what do you see, Ashish?
The Apollo Hospital again has been an outperformer within this space. It's up nearly 2% in today's session. And if you look at the daily time frame chart, the stock gave a strong breakout from 7,250 levels with a huge gap up, and now also trying to cross back above the previous high. So the overall undertone is positive for Apollo Hospital. We can expect it to remain in the 52-week high territory and reach towards a level of around 7,800. On the downside, one can maintain a stop loss for the stock at around 7430 levels.
All right, so that's the word on Apollo Hospitals on the charts. But IT and consumer staples are also are likely to perform poorly in the future. That's something that Mukul Kochar believes of Investec Capital. He also shares optimism on the future of FII flows. Let's go across and listen into what he had to say.
Where we have a little bit of a concern is around, of course, when I said the economy is going to be savings investment led, domestic consumption is going to suffer there. So consumer staples, we are negative. We are also negative on Indian IT services, largely because valuations are not supportive. If the currency currency dynamics are not favorable, we think the large cap IT is not going to deliver good returns from here. The short term flows, which is the FII flows, which is what you spoke about, that actually varies depending upon how attractive opportunities are in the market, which literally could turn every few months. In March, the market had become very, very attractive in terms of valuation, and foreign flows were good for the next 2-3 months. Now the market is up from those levels. It's like 10 to 15% appreciation, and therefore people are taking some profits.
All right, coming back to the buzzers in trade, Ashish, you've picked out Havells for us. Havells, another counter that has picked up some steam in the last few weeks. In fact, today it's up 2%. This week or Havells has been doing well, but it has been correcting over the last 6 months. So what do you see on the charts for here on? Do you see a breakout coming in for Havells?
Yes, possible, because Havells has corrected, consolidated, formed an inverted head and shoulder pattern, a very classic pattern that shows that there is a bottoming pattern. This is a bottoming pattern formation, and also the indicators are getting on the buy side on the weekly charts. So the overall undertone for Havells is positive. We can expect the stock to reach towards the level of 1700, and one can maintain a stop loss on the downside at around 1530 levels.
All right, so that's Havells on the charts. Let's move on to the next counter in focus. Another business updates coming in for another PSU banking name, PNB. That's in focus on the back of its updates. Now, global business is up 11.6% on a year-on-year basis at 27.19 lakh crores. The domestic business is also up 11% on a year-on-year basis at 26.17 lakh crores. And the global deposits that are also up 12.8% on a year-on-year basis, and domestic deposits are also traded. They are also up 12.2% on a year-on-year basis. Now, a couple of brokerage notes also that came out in PNB. Citi is maintaining a sell with a target price of 101 rupees. Morgan Stanley is maintaining an underweight with a target price of 100 rupees. On the back of these bearish brokerage notes coming in by Morgan Stanley and Citi that are maintaining a sell call on PNB. PNB is trading with cuts of almost 2.5% in trade today. But coming to you, Rabinda, you picked out Biocon Biologics for us. Tell us what's the news here.
Well, there's another pharma stock, Biocon, is in focus, where Biocon Biologics, which is a subsidiary of the company, has announced that the European Commission has granted marketing authorization in the European Union for Vebzo and Avifraxy, biosimilar of denosumab. And Vebzo is authorized for the prevention of bone complication in adults with the advanced cancer involving bone, and treatment of adults and skeletally mature adolescents. And Avifraxy is authorized for the treatment of osteoporosis in men and post-menopausal in women, for the treatment of bone loss linked to the hormone ablution in the men with psoriasis cancer. So back of this, Biocon is in focus, and the stock is holding a gain of more than 1.5%.
All right, moving on from Biocon to a pharma named Natco Pharma. Ashish, you've picked out, in fact, another interesting stock which has been trading up in the last 5 days. In fact, it has shown some strong momentum. 10% gains coming in on Natco Pharma after 6 months of correction. Tell us from here on, how do you see, what do you see on the charts for Natco Pharma? This seems to have been picking up pace.
Yes, if you look at Natco Pharma, I think the stock has formed a very important low around 750. That was the low which was formed also in the month of November last year, in 2023, sorry. In November 2023, same levels, the stock showed a very spectacular rise and it is bouncing back from the same levels again. So there is a possibility that Natco Pharma can move towards the level of around 1080 on the upside, and on the downside one can maintain a stop loss of around 880 for the stock.
All right, moving on from Natco Pharma to the chemical space. Now, we do see chemicals that can be turnaround, that can be a turnaround theme, and that's what Gautam Shah, who's the founder of Goldilocks Global Research, feels. Let's go across and listen into his take coming on the chemical pack.
Chemicals could be the turnaround candidate of the next 6 to 12 months. We've seen what SRF is doing. If you think that it's a leader in the pack, and some of the other top names are also seem to be turning around.
Okay, so that's the word coming in from Gautam Shah. But Ashish, hi, let's talk about Pilite Industries. That's a stock that you've picked out for us on the charts. Give us a sense of how this stock is shaping up on the charts and what are the next levels that you're watching out for.
See, if you look at Pilite Industries, the stock has managed to bounce back from its 52-week levels of support, 50-week moving average support, and now it's almost breaking out of the prior pivot high, which is around 3,130 levels. So it's just that there is an expectation that it's going to give a strong breakout as the volumes are picking up, and we can expect the stock to move towards the level of 3,220 on the upside. On the downside, the gap area, which is the support, is around 3,070 levels for the stock.
Okay, so that's the take on Pidilite, and those are the key levels to watch out for. Let's move on and talk about stock from the NBFC space that is buzzing on the back of its Q1 update, but the move is quite contrary to what the numbers have been, and that's MLM Finance that I'm talking about. It was up more than 3.5% at one point of the day, where you can see that spike, but it has fizzled out from the day's highest point and is up 2.2%. The stock is up despite a weak Q1 business update that we've seen, because overall disbursement has come in at approximately 12,800 crore rupees, which is a growth of just 1% on a year-on-year basis. Business assets have approximately come at 1.2 lakh crore rupees, and that has grown by 15% on a year-on-year basis. The collection efficiency, now this is the reason why the stock could be doing okay, is estimated to be at 95% for Q1, which was 94% this time last year. So slight uptick in the efficiency could be aiding this stock today. The stage 3 asset is estimated in the range of 3.8 to 3.9%, a slight uptick versus 3.7% in March of this year. And if you take a look at the stage 2 assets, it's estimated to be in the range of 5.8 to 5.9% compared to 5.4%. So, well, you have a lot of reasons coming in for this stock to be in focus, or rather lots of metrics that are contrasting, but nonetheless the stock is holding to the green, up 2% as we speak.
All right, moving on then to A. Balasubramanian, who's the Managing Director and CEO of Aditya Birla Sun Life AMC, who says that the current macro ecosystem is likely to support growth. Let's go first and listen into what else he had to say.
The positivity, of course, continues. I think that reflects on the way the inflows in the mutual fund, the overall participation in the equity market reflects that given the past trends that we have seen, despite all the uncertainty that came in, India actually behaved quite nicely from the overall market perspectives. So that is being the case, I would say it's already priced in, and to some extent it's getting discounted. But there is still no clarity which has come in terms of how the earnings will pick up. But I think we need to also take into account the agriculture, the monsoon has been so good, rural economy continues to do very well. And government is pushing quite a lot in terms of rural India focus, and therefore all those things will lift actually the income in the hands of people. As the credit starts picking up, you lift the money in the hands of people, therefore the spending will start coming back. So this is a question of time, and nobody wants to, of course, at this point of time predict, given the fact India is still trading at say 20 time PE multiples.
All right, moving on to the next buzzer that is in focus today, and that is Motilal Oswal. In fact, this stock is firing on all cylinders today on the back of the fact that the AUM has grown at a compounded annual rate at a CAGR of 34% over the last 5 years, and it surged over 35,180 crore rupees in June 2020 to over 1.5 lakh crores. As of today, and of course the Motilal Oswal AMC AUM is spread across 84,300 crores in active mutual funds, 33,600 crores in passive funds, and 15,000 crores under portfolio management services, and 70,000 crores in category 3 alternative investment fund. Now, the asset manager is currently overseeing close to 95 lakh unique folios and caters to 79 lakh crore customers across 200 locations. And that's the business update coming in on Motilal Oswal. And on the back of achieving 1.5 lakh crores in AUM, Motilal Oswal is buzzing away in trade with gains of over 6.5%.
Okay, strong moves coming in on Motilal Oswal Financial Services. But let's move on. And Ashish, Vard is the stock that you've picked out for us on the consumer durable side. Now, last 6 months, the stock has lost some steam. But if you take a look at the recent recovery that we've seen from the 6-month lows, last 1 month or so, last 5-6 weeks, the stock has managed to find some up move. Do you believe that this is sustainable on the charts? And if so, what are the levels that you're spotting?
Yes, it looks that it has to be sustainable on the chart, because we saw some underperformance from the stock from around 550 levels to the low of 300, but it has slowly and steadily managed to climb back up towards the level of 396 now, and it's showing a candle which is bigger than the prior many days of candle. That shows the momentum is picking up in Vard, and we can expect it to reach towards the level of 425 on the upside. On the downside, one can maintain a stop loss for the stock at around 383 levels.
All right, moving on. The beginning of every month, this is the beginning of July, and like all the months, the beginning of every month marks the financial activities like salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments as well. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing amongst Indians, helping them secure the financial future. As a part of this campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
Okay, on that note, we'll slip into a very short break on this edition of Market Fatafat and keep talking about more stocks on the other side when we return. So you stay tuned and we'll be right back.